What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at Pound USD this morning, which offered us a potential 3.8R trade from a really nice inversion fair value gap setup. Let's jump into the high time frame analysis now and see how we came up with this potential entry. To better understand why I took a trade on Pound USD instead of Euro USD, I'll run through my thought process when looking at Euro this morning. So you can see we are actually trading currently inside yesterday's New York AM session range. The PM session essentially consolidated, nothing happened. As Asia opened up, we took PM session low. However, the low from New York AM session has been left intact. We had displacement coming higher, so we've got fair value gaps now on the 15-minute time frame, taking us higher to take out the PM session high. So initially I've got more of a bullish bias coming into London. So I'm not looking for a reversal here at the open of the session. What I was more interested in is looking for a continuation trade to take out New York AM session high. The thesis being we did have a big fair value gap left over from the New York session, which was respected through the PM session. We've come down and then we are leaving bullish fair value gaps going up. So I wanted to see how price was going to react at these. So my initial analysis was to set alerts looking for a pullback to optimal trade entry. So that's from the Asia low here through to the current high. Within optimal trade entry, which is our 618 fib level here, we've got a fair value gap, but we also have an order block underneath, which I've highlighted. So I was looking to see how price was going to react when we came to optimal trade entry. Or alternatively, look for a reaction when we took the New York AM session high. On Euro, nothing happened. We didn't hit my optimal trade entry, so I wasn't triggered to look for a trade at this point, and we didn't take out the New York AM session high. So this is why I wasn't alerted to any kind of action on Euro USD. Let's jump onto Pound USD and see why I did get in that trade. Here we are on the Pound USD chart. Similar to Euro USD, we can see we had a big drop yesterday in the London session this time. Pullback and more or less a consolidation in the New York AM session. So not as much volatility as there was on the Euro in the AM session. You can see that New York AM Euro took out the low of London, whereas the Pound didn't. So we are consolidating inside this range. Coming into the session, similar to the Euro, we were leaving bullish fair value gaps. Just taken the New York PM session high, only just, so we've left relative equal highs here. New York AM session high was what I was looking at, and likewise potentially a pullback into optimal trade entry of this range. See again how we react at this order block if we did get that. So my two key levels that I'm looking for a reaction at are going to be the New York AM session high, which consequently is inside a new week opening gap, and also a sweep of the Asia low or potentially optimal trade entry depending on how price reacts if we get to that level. So as we scroll forward now on the 5-minute chart, we can see where my alert was triggered to indicate a potential trade. So we've got untapped liquidity from the New York PM session. More importantly, I was looking at New York AM session high. So let's start scrolling forward now. So price is continuing bullish price action here. We've created a 5-minute fair value gap just before London opens. It looks like it's been respected. Price is pulling away. Again, coming up, displacing higher. We're now keeping an eye out on the New York AM session high. I'm going to just remove this fib for the pullback because obviously this is not valid anymore. So we're breaking out higher. We've taken the New York PM session high. However, I'm more interested in the New York AM session high because clearly there's more volume at that area. Strong reaction on the 5-minute. Left displacement, fair value gap straight into the New York AM session high. So we've taken the New York AM session liquidity now. I'm going to drop onto the 1-minute time frame to look for my reversal pattern. So I'm looking for some kind of indication that price may be reversing at this point, having taken liquidity. So strong displacement higher, leaving bullish fair value gaps. So there's our first indication. So first candle of the new hour is a massive engulfing candle. It's taken this fair value gap, hasn't respected it at all. So we could see previously the fair value gaps, bullish fair value gaps were being respected. They're now not being respected. This could potentially now be acting as an inversion fair value gap. First sign of a potential reversal at this point. So we do come wick into this and then continue lower. We've got our break of structure would be this here. So we've got some liquidity at this point, which will be sell side. And you can see we have also on the 1 minute chart, quite clearly this level here has been respected. So there's quite a lot of sell side liquidity residing under these relative equal lows on the 1 minute as well. So these would be potential targets coming down. Left our first bearish fair value gap here. So we're coming down looking at this sell side. So it's not taken the sell side. So that's the first thing that I find suspect. So I was getting more interested now in potentially looking for a short trade. We've closed through leaving an inversion fair value gap. So I want to see how price reacts at this level. And given that we're now engineering liquidity here, relative equal lows, we've not taken out this swing low yet. Another thing that we want to keep an eye on for extra confluence is optimal trade entry of this move down. So that does reside within this inversion fair value gap as well. So again, we're coming for this low, not taking it. So again, relative equal lows. We're engineering liquidity above this low. Pull back. So we're coming into the new 15-minute candle here, 215 here. Leaving some bullish fair value gaps. There's still no entry at this point. We want to be pulling back into a discount. So here we go, big strong price action coming back in. Bullish fair value gap, bullish fair value gap, bullish fair value gap. And then strong displacement back again. So again, we have now at this point an inversion fair value gap here. So this bullish fair value gap was not respected. So we were looking to see how price was going to react within this inverted fair value gap. And we can see the price has come up more or less just over the 50% level of this inversion fair value gap, has rejected, leaving another inversion fair value gap inside it at optimal trade entry. So this is all stacking up nicely. The time is now 2:26. So we're coming into a new half-hour candle very, very shortly, which again, if any of you have watched my previous videos, you'll know that the start of new 15-minute candles is always something I'm interested in observing for additional volume coming in to create a new direction. So what we've had is we've had 15-minute blast up, basically a 15-minute engineering of liquidity now at this point. In fact, 30 minutes. We're coming up to 30 minutes of liquidity building here. So potentially at the new half-hour candle, we can get our reversal on, looking to take out this sell side that's been engineered here and potentially have a run on the sell side from the gap between London and Asia. We've got our inversion fair value gap. I'm now keeping an eye on this. So within that inversion fair value gap, we've created a bearish fair value gap. So this is now a balanced price range. So we have a bullish fair value gap overlapped by a bearish fair value gap. So where those two overlap is a BPR. Just going to change this. Balanced price range. It's a very highly sensitive area. Time is now 2:27. Bit of a pin hammer here. Bearish candle 2:29. What I looked at here is, again, I am thinking new half-hour candle, we're going to take a run on these lows. Risky entry is a break of this low, so the new candle may open. Stop loss above this high because we have left a fair value gap here, targeting this low. So the thesis for this is we're going to have a new half-hour candle open up. When I was watching this in live time, price pulls up and then it breaks this low, which is why I got into this, because we did not get into this BPR. You can see we had a slight pullback and then a strong move down. So the entry is on the break of this candle low, 29. The new half-hour candle opens at 30. Break of that low, expecting all of this now to hold. So if we close above this, then the trade is invalid because we will be going to take out the high. However, my thesis is that this inversion fair value gap is holding. We have a balanced price range, which I expected to hold. Price breaks that low, and then we are targeting the sell side that's been engineered down here. Really, really strong price action, taking out that sell side. And then ultimately expecting this sell side to be taken. And there we go, that would be me closed out in full for a 3.8R trade. So the reason I got triggered into the pound trade as opposed to a euro trade is that we did take out the New York AM session high, saw this consolidation here, take note of the new half-hour candle opening, respecting this inversion fair value gap, and then expecting a run on the sell side that's been engineered below us. I hope that analysis was useful. If you did enjoy it, please give the video a thumbs up. If you have any questions, leave them down in the comments section below. I'll be happy to try and answer where I can. And likewise, if you enjoy this kind of analysis, consider subscribing to the channel. We are now back after the summer break and the difficult market in August. And I'm planning on doing daily uploads with analysis such as this. It'd be great to have you on board. Thanks for watching. I'll see you again very soon with the next analysis.